What about liquidity in the option space? Where are we seeing liquidity? Where are we not seeing liquidity? Why does that matter? And I'll keep it with you.
Sure. Listen, liquidity is still a fraction in crypto as it is in equities and rates. I mean, it's still a very nascent market. Most of the liquidity within the options market in particular is still offshore on exchanges like Deribit or OKX. However, that's definitely changing, and that has been changing quite dramatically since FTX. So there's been a marked movement away from foreign exchanges into the CME. So people are much more cognizant of counterparty risk now. There's also been a big movement out of listed into bilateral trading. And that's where you get a lot more transparency. So if you're trading bilaterally with a firm like Cumberland, you'll get audited financials, you get to speak to a human being, you get to talk to risk managers and credit officers, and it feels very TradFi in that respect. And so that brings a lot of security and confidence to counterparties that they don't necessarily get from the exchanges.
Chris?
I think Rob's 100% correct. And also people need to understand there's really three pools of liquidity. SEXs, which are centralized exchanges, DEXs, which are decentralized exchanges, and then the OTC or secondary market on that. And there has been a rotation a little bit away from DEXs, but on DYDX, there's actually super big liquidity on those contracts. And so we're kind of feeding and pricing from all sources to create what we would call a mid to then base all the decisions off of. But whilst being somewhat nascent and young, I think there's a super deep pocket of liquidity on BIT and ETH. And unlike 2019 through really first quarter 2022, there's about another 20, 30 names that had a lot of liquidity in the options market, even weeklies, and it's pretty much disappeared. Some of that is a TradFi concentration to only Bitcoin and Ethereum, and maybe that's even regulatory. But we would certainly like to see this advancement that on BIT and ETH that's occurring happen on a lot more names, because there is deep liquidity in the top 100.
That's it. I mean, it's a good point, and a lot of what we're working on is both in the investment space and in the option space, recognizing that liquidity in anything after Bitcoin and ETH, or investor interest in anything in Bitcoin after Bitcoin and Ether, even attention span after Bitcoin and Ether for the people who are going to spend 5% of their time thinking about digital assets is limited. We think, and just mirroring what happens in equities and in commodities, right? Index derivatives solve that problem. Both Delta One liquidity instruments, futures and options, solve the risk management problem to create avenues towards breadth, diversification, correlation plays, everything from alpha generating correlation markets with index options all the way down to risk management that reaches beyond the majors. So I don't foresee that we're going to enter a world. Think about why equity options in the United States are so liquid out to many strike prices across 5,000 names, because of requirements, because of exchange requirements. Kind of wouldn't exist if there weren't those requirements intended to protect retail investors, to make sure there's a bid and offer for every strike, for every name. Crypto's not in any foreseeable future going to have that kind of requirement. Liquidity is going to exist when it needs to exist. Bitcoin and Ether, price discovery is still difficult, right? So we think index options will present a solution for risk management, for the more 5%er investor, right? And indeed for the hedge fund who wants to find new alpha opportunities.
One point that I think is important to make before we move on is, while it is nascent and it is complex, this is, without exchange requirements, what ends up happening is you get the realist price on Earth. And it's a fascinating, as a quant, it's fascinating to pull in this data, because it is the only market where humans are entirely in control, speculative or otherwise, of the price itself. And then because it's on blockchain, you get to analyze it 3 days from Sunday. So it's an absolutely fascinating thing to witness, participate in, and hopefully benefit from.
Yeah, and you mentioned IBIT, Vol, as well. I mean, that's going to be an amazing addition to crypto. So if you look at the actual underlying ETFs that brought in over 20 billion of flow into the crypto space, it's a trusted venue that institutional accounts can experiment with and get comfortable with crypto. The IBIT options will be the same thing. They'll be able to get to know the vol, how the stuff moves, get the risk managers comfortable with the product. And that then leads into more complexity, leads you down further into the tail of crypto. So we're very excited for that to come when it does come.
Let me just add something on tail exposures and derivatives. You have the traditional folks that don't have the tech to keep up, and you have the crypto folks that don't have the licenses to be competitive. And part of it is some structural issues where current regulations require intermediaries in a world where you don't need them. So I think over time we're going to see convergence. One of the other handicaps amongst the traditional folks is that, clearing is centralized risk. And if you're starting to put more and more crypto and mixing that risk with farmers and ranchers, that's an issue. And so over time, I do think the crypto natives have a leg up. It just takes time to get those licenses in place.